crazy bull run in altcoins, crazy bull run in Bitcoin coming, crazy bull run in stock market is coming because the Fed is about to print money. And guess what? I'm making this video before, this is the chart you have to understand, by the way. This is going to explain everything. And by the way, I'm making this video right now before the Federal Reserve makes its meeting. This is like 24 hours, about 24 hours before the Fed meets on the Wednesday. You can see here on the price action, you can see this is live because the price are ticking here, right? I'm making this one day before, Tuesday, before the Fed makes its decision. How am I sure that the Fed is going to be pumping the markets? Here's the thing. This is the most important chart you have to understand right now. This is going to explain everything. The Fed is going to go into money printer mode, US dollar printer mode, what they call QE. QE, quantitative easing, like what they did during COVID, right? What they did during the 2009 meltdown. GFC, global financial crisis. Global financial crisis is what brought life to Bitcoin. That's why Satoshi Nakamoto created Bitcoin in the first place to begin with. Now, I understand. The smart people in the audience will say, no, Pablo, you are so wrong because the Fed has said in their testimony to the Congress that they will never do QE until rates go to zero. So this is how the Fed says they're going to do this. I think you all know by now if they do QE, which is known as the printer, right, of US dollars, then basically everything goes straight up. Gold, silver, Bitcoin, stocks, houses, everything. I think QE is about to come, right? And I'm making this video 24 hours. You can see the prices of everything, right? 24 hours before the Fed makes its decision, right? And I'll explain to you guys why I think that is the case. So usually these are the steps. The Fed first starts cutting interest rates, right? Goes from 5.5 to 5.25, 5%, 4.75, 4.5, 4.25%. That's where we are right now. And when the Fed cuts interest rates on Wednesday, I think we're going to get to 4%. And then we go sub 4% in the next few meetings. Then the Fed is going to do something called end of QT. They end QT first, but they do not do QE. They're going to end quantitative tightening, but they don't start QE just yet. Quantitative tightening basically means you're taking money out of the system back to the Fed, taking money out of, like, reversing the printer process, right? QE is you start the printing machine again. They don't, just because they end QT doesn't mean they're going to start QE. The Fed said very clearly, they're going to wait for rates to go to zero first, then they do QE, which is start the printer, right? Which seems sensible because right now rates are at 4.25%. And after the rate cut on Wednesday, which I'm making the video 24 hours in advance and I'm predicting like pretty much we're going to get the rate cut, then we're going to get to 4%. 4%. That's a long way to go to 0%, right? Remember during COVID, they went to 0%. We're going to get to 0%. And then the Fed starts QE, which is the printer. That's a long time to go. Maybe we never even get there for another 4 or 5 years or whoever knows how long it is. But I'm telling you, we're very, very close to QE or Fed printer. And you have to understand what this chart means. I'm going to explain it to you guys. Here we go. You've heard of the reverse repo facility, right? Reverse repos. That's when basically, you know how during COVID, basically the Biden government and the Trump government sent out a lot of stimulus checks. People received $800 per American, women, child, or women, men, or child or baby. So you have like 2 adults, mother and father, and like 3 babies, 3 kids. And then you basically receive $800, is it $1,600 times by 5, right? So that's like what, $4,000, $8,000, whatever the amount is. And so people had a lot of that money, and what do the people do with it? They either bought crypto or they put it into a bank. If they put it into a bank, then it shows up here. Basically, the banks have extra liquidity, and they lend it to the Federal Reserve. Yeah, I know. Forget the technical jargon. They basically give it to to the Federal Reserve, right? Reverse repos means Federal Reserve gives treasury bills or treasury bonds, right? Pieces of paper, treasury bills or treasury bonds to the bank. The bank takes that and says, here you go, here's $100 million, or here's $500 million. They lend that money to the Fed. Of course, Fed doesn't need that money, but the process goes, then the next day they switch it back. They give it's called a repo, repurchase agreement. They give that bonds back to the Fed, and the Fed gives the money back to the banks. In short, the banks made some money, right? Made like 4.3%, 4.4%. It's above the 4.25% the federal funds rate we're at right now, right? So the banks made money that day. But now we've gone from the banks lending to the Fed to the banks borrowing from the Fed. See how we've gone from green bars to now red bars. The banks are running out of money. The banks, I'll say it again, the banks are running out of money and they're borrowing from the Fed, right? And that's why we're going to have QE.